Welcome back to the channel, future top producers. You've made it to set number 3, and today we are turning up the heat. We have 40 essential practice questions standing between you and total test day confidence. I'm not just giving you answers, I'll be breaking down the why behind every single one. Grab your coffee, lock in your focus, and let's completely crush this exam. Let's dive into question number 61. Question 61. The spendthrift clause in a life insurance policy is designed to A. Protect the policyholder from creditors. B. Allow the insurer to change the beneficiary. C. Ensure the beneficiary cannot squander the proceeds. D. Increase the cash value of the policy. The correct answer is C. Ensure the beneficiary cannot squander the proceeds. Question 62. What does a term rider in a life insurance policy offer? A. Coverage for minor beneficiaries. B. Additional long-term care benefits. C. Guaranteed premium returns. D. Temporary additional coverage for a specified period. The answer is D. Temporary additional coverage for a specified period. A term rider provides temporary additional coverage on a life insurance policy for a specified period. This rider can be particularly useful for covering short-term financial obligations, such as a mortgage or college tuition, which might not require permanent coverage. Additional long-term care benefits and coverage for minor beneficiaries are not features provided by a term rider. Similarly, guaranteed premium returns pertain to return of premium policies, not term riders. Question 63. Which of the following policies combines investment options with flexible premiums and a guaranteed minimum death benefit? A. Variable universal life. B. Ordinary whole life. C. Term life insurance. D. Single premium life. The correct choice is A. Variable universal life. Variable universal life insurance combines flexible premiums, investment options in various subaccounts, and a guaranteed minimum death benefit. This policy allows the policyholder to potentially increase the cash value based on investment performance while maintaining the security of a minimum death benefit. Ordinary whole life, term life insurance, and single premium life do not offer this combination of features. Question 64. In insurance contracts, consideration is provided by the insured through the blank. A. Submission of a claim. B. Payment of premiums. C. Selection of beneficiaries. D. Annual policy review. The answer is B. Payment of premiums. Consideration in an insurance contract is the value exchanged between the parties. The insured provides consideration by paying premiums, which is their financial contribution to the contract. Submission of a claim, selection of beneficiaries, and annual policy review are not forms of consideration in the context of establishing the insurance contract. Question 65. Sarah receives her life insurance policy by mail, which includes a statement of continued good health to be signed upon delivery. This signifies that the coverage starts A. Once the premium is paid. B. On the date of the policy issue. C. When Sarah receives the policy and signs the statement. D. As soon as the insurer mails the policy. The correct answer is C. When Sarah receives the policy and signs the statement. Coverage typically begins when Sarah receives the policy and signs the statement of continued good health, confirming that there have been no significant changes in her health since the application was submitted. This ensures that the insurer's risk assessment remains accurate. Starting coverage on the date of policy issue, as soon as the insurer mails the policy, or once the premium is paid without the signed statement would not adhere to standard underwriting procedures. Question 66. Sarah decides to surrender her whole life insurance policy. What non-forfeiture option allows her to receive a lump sum of money? A. Waiver of premium. B. Reduced paid-up insurance. C. Extended term insurance. D. Cash surrender value. The answer is D. Cash surrender value. Question 67. Which type of term life insurance is best suited for covering a mortgage? A. Annually renewable term. B. Decreasing term. C. Level term. D. Increasing term. The correct choice is B. Decreasing term. Decreasing term life insurance is ideal for covering debts like a mortgage because the death benefit decreases over time, matching the decreasing balance of the home loan. This makes it cost-effective for policyholders looking to protect their home loan. Level term provides a constant death benefit. Increasing term offers a rising death benefit, and annually renewable term does not match the mortgage's decreasing balance. Question 68. How can dividends be used to lower future premium payments? A. By selecting the reduction of premium payments option. B. By choosing the accumulation at interest option. C. By purchasing one-year term insurance. D. By taking the dividends as cash. The answer is A. By selecting the reduction of premium payments option. Policyholders can use dividends to reduce future premium payments by selecting the reduction of premium payments option. This applies the dividend amount directly to the premium, lowering the out-of-pocket cost for the policyholder. Accumulation at interest, taking dividends as cash, and purchasing one-year term insurance do not reduce future premium payments. Question 69. Sarah is an insurance agent whose license was revoked due to unethical practices. How long must she wait before reapplying for licensure? A. 3 years. B. 5 years. C. 4 years. D. 2 years. The correct answer is B. 5 years. Sarah must wait 5 years before reapplying for licensure after her license was revoked due to unethical practices. This waiting period serves as a penalty and allows time for corrective action. Waiting periods of 2 years, 3 years, or 4 years are not the standard requirement. Question 70. One dividend option allows policyholders to purchase additional paid-up life insurance. This option is known as blank. A. Reduction of premium payments. B. Cash payment. C. Paid-up additions. D. Accumulation at interest. The answer is C. Paid-up additions. The paid-up additions option allows policyholders to use their dividends to purchase additional paid-up life insurance, increasing the death benefit and cash value of the policy. This option enhances the policy's value over time. Cash payment, reduction of premium payments, and accumulation at interest are other dividend options that do not increase the policy's death benefit in the same way. Great job so far! That is the first 10 questions down. Take a quick breath, stay focused, and let's keep moving. Question 71. Question 71. What is the purpose of a children's term rider? A. To waive premiums in case of disability. B. To provide coverage for the policyholder's parents. C. To add term life insurance coverage for the policyholder's children. D. To increase the cash value of the policy. The correct choice is C. To add term life insurance coverage for the policyholder's children. Question 72. How long must an insurance agent in Georgia keep detailed records of their insurance transactions? A. 3 years. B. 7 years. C. 5 years. D. 2 years. The answer is C. 5 years. Insurance agents in Georgia must keep detailed records of their insurance transactions for 5 years. This requirement ensures that records are available for review and compliance checks. Keeping records for only 2 years, 3 years, or 7 years does not meet the specific regulatory requirement. Question 73. Sarah decides to surrender her whole life insurance policy. What non-forfeiture option allows her to receive a lump sum of money? A. Cash surrender value. B. Reduced paid-up insurance. C. Extended term insurance. D. Waiver of premium. The answer is A. Cash surrender value. When Sarah surrenders her whole life insurance policy, the cash surrender value option allows her to receive a lump sum payment equivalent to the policy's accumulated cash value, minus any surrender charges. This option provides immediate access to the policy's value. Extended term insurance, reduced paid-up insurance, and waiver of premium are other non-forfeiture options that do not provide a lump sum payment. Question 74. Which of the following best describes a life settlement? A. A transaction in which a policyholder sells their life insurance policy to a third party for more than its cash surrender value, but less than its net death benefit. B. A situation where the insurer buys back a policy from the policyholder. C. An agreement where the policyholder retains ownership but assigns the death benefit to a third party. D. A transfer of a life insurance policy to a family member as part of an estate plan. The correct answer is A. A transaction in which a policyholder sells their life insurance policy to a third party for more than its cash surrender value, but less than its net death benefit. A life settlement involves the sale of a life insurance policy to a third party for an amount greater than the policy's cash surrender value, but less than the net death benefit. This option provides the policyholder with immediate financial benefits. Retaining ownership while assigning the death benefit, the insurer buying back the policy, and transferring the policy to a family member do not describe life settlements. Question 75. What does the consideration clause in a life insurance policy describe? A. The legal obligations of the beneficiary. B. The insurer's promise to pay benefits. C. The amount and frequency of premium payments required from the policyholder. D. The conditions under which insurance coverage is curtailed. The answer is C. The amount and frequency of premium payments required from the policyholder. The consideration clause specifies the policyholder's obligation to pay premiums, detailing the amount and frequency of these payments. This clause forms the basis of the policyholder's part of the contract, ensuring the insurer provides coverage in exchange for these payments. The clause does not detail the insurer's promise to pay benefits, the legal obligations of the beneficiary, or conditions under which insurance coverage is curtailed. Question 76. A temporary license may be valid for up to blank months. A. 6. B. 9. C. 3. D. 12. The correct choice is A. 6 months. A temporary license may be valid for up to 6 months. This temporary period allows new agents to operate while completing the full licensing requirements. Periods of 3 months, 9 months, and 12 months are not the standard maximum duration. Question 77. A. Blank rider allows a policyholder to add term insurance coverage for their spouse. A. Accidental death. B. Disability income. C. Waiver of premium. D. Spouse/other insured term. The answer is D. Spouse/other insured term. Question 78. Return of premium term life insurance provides a refund of all premiums paid if the insured blank. A. Cancels the policy early. B. Converts the policy to a whole life policy. C. Files a claim. D. Outlives the policy term. The correct answer is D. Outlives the policy term. Return of premium term life insurance refunds all premiums paid if the insured outlives the policy term. This feature provides a financial safety net for those who outlive their coverage, making it a more attractive option, despite higher premiums. Filing a claim and converting the policy are not conditions for a premium refund, and canceling the policy early typically results in no refund. Question 79. Sarah wants to start receiving payments from her annuity 1 year after purchasing it. Which type of annuity should she purchase? A. Immediate annuity. B. Variable annuity. C. Deferred annuity. D. Fixed annuity. The answer is C. Deferred annuity. A deferred annuity is suitable for Sarah as it begins payouts after a specified deferral period, in this case, 1 year. An immediate annuity starts payments almost immediately after purchase, while fixed and variable annuities refer to the nature of the payout amounts, rather than the timing. Question 80. The commissioner may impose fines up to blank per offense if the licensee knew or should have known about the violation. A. $3,000. B. $5,000. C. $2,000. D. $4,000. The correct choice is B. $5,000. The commissioner in Georgia can impose fines up to $5,000 per offense if it is determined that the licensee knew or should have known about the violation. This serves as a deterrent against noncompliance. Lower fines, such as $2,000, $3,000, or $4,000, are incorrect and not reflective of the maximum penalty. You are doing incredible! We are past the halfway point of this video. Shake off the fatigue, grab a sip of water, and let's conquer these final questions. Question 81. Credit life insurance is designed to A. Cover funeral expenses. B. Provide investment returns. C. Offer retirement benefits. D. Pay off a loan in the event of the borrower's death. The answer is D. Pay off a loan in the event of the borrower's death. Question 82. One dividend option allows policyholders to purchase additional paid-up life insurance. This option is known as blank. A. Reduction of premium payments. B. Paid-up additions. C. Cash payment. D. Accumulation at interest. The correct answer is B. Paid-up additions. Question 83. Mark, an insurance counselor, accepts a commission for a policy he recommended. According to Georgia insurance regulations, is this allowed? A. No, unless they disclose the commission to the client. B. No, counselors cannot accept commissions to ensure unbiased advice. C. Yes, counselors can receive commissions. D. Yes, but only if the commission is less than $100. The answer is B. No, counselors cannot accept commissions to ensure unbiased advice. Insurance counselors in Georgia are not allowed to accept commissions to ensure they provide unbiased advice to their clients. This regulation helps maintain the integrity of their recommendations. Unlike agents who can receive commissions, counselors must avoid any financial incentives that could influence their advice. Question 84. Group life insurance is typically offered by blank to provide coverage for their employees. A. Families. B. Nonprofit organizations. C. Individual policyholders. D. Employers. The correct choice is D. Employers. Group life insurance is typically offered by employers to provide coverage for their employees as part of an employee benefits package. This coverage is generally more affordable and accessible than individual policies. Families, nonprofit organizations, and individual policyholders are not the primary providers of group life insurance. Question 85. A blank allows the policyholder to review the terms and conditions of a life insurance policy and return it for a full refund within a specified period. A. Contestability period. B. Grace period. C. Free look period. D. Reinstatement period. The answer is C. Free look period. The free look period is a consumer protection feature that allows the policyholder to review the policy terms and conditions thoroughly. During this period, typically lasting 10 to 30 days, the policyholder can return the policy for a full refund if they are not satisfied with the terms. Grace period refers to the additional time provided to pay overdue premiums. Reinstatement period is the time frame within which a lapsed policy can be reactivated. And contestability period is the period during which the insurer can challenge the validity of claims. Question 86. Which whole life policy allows the insured to pay all the premiums for coverage within a specified period shorter than a lifetime, such as 10, 20, or 30 years? A. Limited pay whole life. B. Single premium whole life. C. Ordinary whole life. D. Convertible whole life. The correct answer is A. Limited pay whole life. Limited pay whole life insurance allows the policyholder to complete premium payments over a shorter, specified period, such as 10, 20, or 30 years. After this period, no further premiums are due, but the coverage continues for the insured's entire life. A. Single premium whole life requires a one-time payment. C. Ordinary whole life requires lifetime premium payments. And D. Convertible whole life allows for policy type conversion, but does not specify a limited premium payment period. Question 87. Which type of whole life insurance policy requires premiums to be paid over the entire lifetime of the insured? A. Single premium life. B. Ordinary whole life. C. Limited pay life. D. Variable universal life. The answer is B. Ordinary whole life. Ordinary whole life insurance, also known as straight life or continuous premium whole life, requires the insured to pay premiums for their entire lifetime. This type of policy ensures that coverage remains in force as long as premiums are paid. It provides a guaranteed death benefit and accumulates cash value over time. A. Limited pay life and B. Single premium life do not require lifetime premiums. Limited pay requires payments for a set period, and single premium is a one-time payment. D. Variable universal life offers flexible premium payments and investment options, unlike ordinary whole life. Question 88. An incomplete insurance application can result in which of the following? A. Automatic denial of coverage. B. Delay in policy issuance. C. Lower premiums. D. Immediate issuance of the policy. The correct choice is B. Delay in policy issuance. An incomplete insurance application can lead to delays in policy issuance, as the insurer needs all necessary information to properly assess the risk and determine appropriate coverage terms. Without complete details, the underwriting process cannot proceed efficiently. Immediate issuance of the policy, lower premiums, and automatic denial of coverage are not typical consequences of an incomplete application. Question 89. Which designation allows the policy owner to change the beneficiary without the beneficiary's consent? A. Revocable beneficiary. B. Per stirpes beneficiary. C. Tertiary beneficiary. D. Irrevocable beneficiary. The answer is A. Revocable beneficiary. A revocable beneficiary designation permits the policy owner to change the beneficiary without requiring the current beneficiary's consent. This flexibility is crucial for policy owners who might need to update their beneficiaries due to changing personal circumstances. An irrevocable beneficiary designation requires the beneficiary's consent for any changes, while tertiary and per stirpes beneficiaries relate to the order of succession and do not impact the ability to change beneficiaries. Question 90. A retirement plan that does not meet federal criteria and hence does not qualify for favorable tax treatment is known as a blank plan. A. Premium. B. Non-qualified. C. Qualified. D. Vested. The correct answer is B. Non-qualified. A non-qualified retirement plan does not meet the specific requirements set by federal tax laws, and thus does not qualify for the favorable tax treatment that qualified plans receive. These plans often provide more flexibility, but do not offer tax benefits, such as tax-deferred growth or deductible contributions. Qualified, premium, and vested plans either meet federal criteria for favorable tax treatment or refer to other aspects of retirement planning. We are down to the single digits. Just a few more questions separating you from mastering this exam. Let's bring it home. Question 91. What type of group life insurance plan requires employees to pay a portion of the premium? A. Contributory. B. Comprehensive. C. Non-contributory. D. Supplementary. The answer is A. Contributory. In a contributory group life insurance plan, employees share the cost of premiums with the employer, contributing a portion of the payment. This is in contrast to non-contributory plans, where the employer pays the entire premium. Supplementary and comprehensive are not standard terms used to describe group life insurance plan payment structures. Question 92. To become a licensed insurance agent in Georgia, an individual must be at least blank years old. A. 21. B. 16. C. 18. D. 25. The correct choice is C. 18. An individual must be at least 18 years old to become a licensed insurance agent in Georgia. This age requirement ensures that agents have the legal capacity to enter into contracts and perform their duties responsibly. Ages 16, 21, and 25 are not the minimum required age. Question 93. In Georgia, anyone aged blank or older is permitted to purchase insurance. A. 19. B. 15. C. 13. D. 17. The answer is B. 15. In Georgia, anyone aged 15 or older is permitted to purchase insurance. This age requirement ensures that individuals have the legal capacity to enter into an insurance contract. Ages 13, 17, or 19 do not meet the legal requirement to purchase insurance in Georgia. Question 94. Variable whole life insurance allows policyholders to invest the cash value in blank. A. A fixed interest account. B. Government bonds only. C. A non-interest-bearing account. D. Sub-accounts similar to mutual funds. The correct answer is D, subaccounts similar to mutual funds. Variable whole life insurance provides policyholders with the opportunity to invest the policy's cash value in various subaccounts that function similarly to mutual funds. These subaccounts can include stocks, bonds, and other investment options, allowing for potential growth based on market performance. This investment flexibility introduces both potential for higher returns and investment risk. A fixed interest account is typical of traditional whole life policies. C, government bonds only limits investment options. And D, a non-interest bearing account does not offer growth potential. Question 95. The Social Security program was initiated in the year blank. A, 1945. B, 1955. C, 1935. D, 1925. The answer is C, 1935. The Social Security program was established in 1935 as part of President Franklin D. Roosevelt's New Deal. It was designed to provide financial security for the elderly, unemployed, and disadvantaged. The years 1925, 1945, and 1955 are incorrect, as they do not correspond to the initiation of the Social Security program. Question 96. David, an agent, fails to submit required documents after a subpoena. What could be a possible consequence? A, immediate termination of employment. B, suspension of license. C, misdemeanor charge. D, revocation of license. The correct choice is C, misdemeanor charge. If David fails to submit required documents after a subpoena, he could face a misdemeanor charge. This legal consequence underscores the importance of complying with subpoenas and providing requested information. Consequences like suspension of license, revocation of license, or immediate termination of employment may also occur, but the misdemeanor charge is a specific legal penalty for noncompliance. Question 97. What does the entire contract provision in a life insurance policy signify? A, the policy and any attached riders constitute the entire contract between the insurer and the insured. B, the policy integrates all premiums into a single payment. C, the policy cannot be modified once issued. D, the policy covers all potential claims regardless of cause. The answer is A. The policy and any attached riders constitute the entire contract between the insurer and the insured. The entire contract provision ensures that the life insurance policy, along with any attached riders and endorsements, constitutes the complete and only agreement between the insurer and the insured. This provision prevents any external documents from altering the terms of the policy, ensuring transparency and protection for both parties. Covering all potential claims, regardless of cause, integrating all premiums into a single payment, and being unmodifiable once issued are not correct interpretations of this provision. Question 98. An employee named John leaves his job where he had group life insurance. What option does he have regarding his life insurance coverage? A, he loses coverage immediately upon leaving. B, he can convert it to an individual policy. C, he can only transfer it to his new employer. D, he must cancel his policy. The correct answer is B. He can convert it to an individual policy. Question 99. What does the war exclusion in a life insurance policy typically stipulate? A, coverage is excluded for deaths occurring during acts of war, whether declared or undeclared. B, coverage is limited to civilian casualties in war zones. C, coverage is extended to include deaths resulting from acts of terrorism. D, coverage is excluded for deaths due to natural disasters. The answer is A. Coverage is excluded for deaths occurring during acts of war, whether declared or undeclared. The war exclusion clause in life insurance policies typically excludes coverage for deaths resulting from acts of war, whether declared or undeclared. This exclusion is intended to limit the insurer's risk in the case of large-scale conflicts. Natural disasters, A, acts of terrorism, C, and civilian casualties in war zones, D, are not covered by this specific exclusion. And here we are, our final question of the day. Question 100. An employee named John leaves his job where he had group life insurance. What option does he have regarding his life insurance coverage? A. He must cancel his policy. B. He can only transfer it to his new employer. C. He can convert it to an individual policy. D. He loses coverage immediately upon leaving. The correct answer is C. He can convert it to an individual policy. When an employee leaves a job, group life insurance coverage typically ends, but it does not mean the person is forced to lose all coverage immediately with no options. Most group life insurance policies include a conversion privilege, which allows the former employee, John in this case, to convert the group policy into an individual life insurance policy, do so without having to prove insurability, no medical exam required. Apply within a limited time period after leaving the job, often around 31 days. And that is a wrap! All 40 questions conquered. If you made it to the very end of this video, you have exactly the kind of dedication it takes to pass your state licensing exam. Drop your final score in the comments section down below. I want to see how you did. If you missed a few, just bookmark this video and try again tomorrow. Hit that like button, make sure you are subscribed, and turn on those bell notifications. Keep up the hustle, and I'll see you in the next one.